I'm not surprised at all. And by the way, I think those dots are going to become more aggressive as we go forward. I actually think within the next 2.5 months, we're going to get a tapering, an announcement of a tapering plan. And I actually do think that rate hikes will begin next year. Now, is that something to panic about? No, not necessarily. In fact, I'd worry if they didn't, because I believe Jay Powell is a great communicator. He was very, very clear. He believes his staff, who says all these factors are basically temporary. I don't believe that. I think there's much more permanent factors going on here. We're going to get our next CPI on July 13th. That's going to be very important. And by the way, all those members, a lot of them were raising questions to Jay, and he said, listen, I think it's temporary. Let's believe the staff until we see something different. So they're going to be watching like a hawk, and so will all the others. Watch that inflation data next 2.5 months. That will dictate the Fed policy going forward. Okay. Remember, I believe that the money that's been pushed in is going to give us a 20% cumulative bump in the price level. That doesn't mean 20% inflation in 1 year or anything like that. 2 or 3 years of 5, 6, 7. That's way above what they put in their forecast. This was step one in moving towards what I think is going to happen. I think there are going to be further steps in the future.
Okay, so we gave you a healthy platform yesterday to share your view that there was going to be a surprise. Now I'm going to invite you into the gauntlet, if I could, Professor, because sure. Jim Lebenthal just put a point of view forward that is a 180-degree turn from what you just said. Jim, I want to let you in. You think rate hikes are not going to be as soon as the professor said, right? You said the market is getting it totally wrong.
Yeah. So, by the way, Professor, you may not remember this, but I'm one of your students, so I hate to disappoint you with a disagreement.
That's fine.
But, well, it was 25 years ago, so I've forgotten a lot, apparently. But listen, what I'm doing right now, Professor, and I'd love your feedback on this, is what I'm saying is whether it's 18 months or 24 months, that's far longer than the horizon in which the normal human being can project. So what I'm doing is I'm simply taking the summary of economic projections, which suggests that liftoff is 2 years from now. It may be later. It may be sooner. There are too many unknown variables, which are the proverbial butterfly flapping its wings today that can cause a hurricane tomorrow, for us to say that it's going to be next year or the year thereafter. So I'm simply going with the governors and their summary of economic plots. Do you think I'm terribly wrong?
No, I think you're right on how much uncertainty there is out there. And the truth of the matter is, let's be honest, Fed forecasts of inflation and of the real economy have not been great. Neither have that of private forecasters. They really do react to the data. My belief is when I take a look out there at the liquidity that's already in the system, and the economic activity and fiscal stimulus, that we're going to get that bump in inflation, and they're going to start seeing it in the July report, the August report, and they're going to modify their policy on that basis. I absolutely agree with you. I think their forecasts are still far too conservative on that.
You're not going to make the bulls happy, because I feel like you're taking the market down a little bit.
Well,
yet again, as you say this.
You say not happy. I don't know whether the market should welcome just unlimited liquidity into the future. I actually think a healthy economy requires them to step back. I mean, it is puzzling to me, with the strongest housing market, maybe in the post-war period, median prices up 20%, that they still have to be buying $40 billion a month of mortgage-backed securities. I mean, what is the purpose of that? I mean, I'm just a little bit puzzled. They've done a great job. I've liked what they did last year. I praised what they did last year. And now it's time to say, we did it. Let's step back and begin the normalization rather than, oh, this is temporary. We're not quite at where we're going to go. And if they're going to try to attempt to fine tune it, no Fed has been able to fine tune the economy. They've got to start sooner.